South Africa's benchmark index is biggest drop in over 6 years. Rand is in danger of slipping towards 6-year lows, and a prospective monetary easing program by the European Union is offering no reprieve. We'll be looking at the way forward for Africa's most advanced economy. Hello and welcome to Global Business as we bring you insights on the constantly changing landscape here in the African continent, from Cairo to Lagos, from Nairobi to Johannesburg, from the big corporates to the small entrepreneurs. We'll be taking you directly to the people making headlines. I am Penny Nakariba, live in the Kenyan capital, Nairobi, and this is Global Business at 9 p.m. here in East Africa. Also coming up this half hour. Olive farms in Tunisia report a bumper harvest. And a new approach to coffee, the Nigerian chain that is raring to outperform global giant Starbucks. It's the first full week of 2015, and we start with a look at the crystal ball for what is in store for African economies. Despite yet to be resolved challenges, including the Ebola outbreak, insecurity, corruption, and a slowdown in global growth, the International Monetary Fund paints an optimistic picture for the continent over the next 12 months. Noel Mokugu has more.
Nigeria is Africa's biggest economy after revising its gross domestic product mid-2014. The rebasing exercise, which saw economic output surge to some $521.8 billion, was carried out in order to give a clear economic overview of the country.
We don't want to risk solving the wrong problems because we don't have adequate information or statistics, or solving problems in the wrong way. That's why this rebasing is so important.
This is a continent the IMF says is taking off. But 2015 sees Nigeria trying to catch up with strong headwinds. Despite years of roaring growth, infrastructure is poor, corruption is growing in key economic sectors, and falling oil prices have also hit the country hard. Investors such as China are quite bullish on the continent's outlook, despite having disappointing figures in its own manufacturing sector.
I know a lot of Chinese manufacturing is moving into the region because it's cheaper than manufacturing in China now. So the growth has been reliant on external factors. I'm not sure Africa's in a situation yet, and this is a general term, that they're self-sustaining yet.
One economy that needs investment is South Africa, Africa's most advanced nation. Industrial action in its mining sector shrank the country's economy by 0.6% in the first quarter. Power outages, a growing budget deficit, and weak banking regulation saw global rating firms slash ratings for the diamond-producing nation.
In order for us as an economy to reach a higher level of growth, a sustainable level of growth, that we need faster investment, that we need to improve on our skills complement, that we need to have greater flexibility in the labor market, and all of these things that need to be brought to bear.
Economists are betting on agriculture to drive growth in 2015, but they also warn that slower growth in advanced economies and emerging markets risks pulling the current developments down. Noel Mokugu, CCTV.
Land reform is not new to Namibia. It's an issue that's caused controversy and was the focus of political campaigns in the recently concluded general elections. Half of the land in the country belongs to private owners, while a large number of black Namibians don't own any. But a nationwide mass housing project is promising to solve the problem.
The coastal town of Swakopmund, beautiful and serene, but just a few kilometers away lies an informal settlement. It's known as DRC, the Democratic Resettlement Community. It was founded in 2001 as a temporary settlement for mine workers, but others looking for affordable housing joined in. Residents here have been waiting for subsidized housing in the city ever since. Now, a new initiative aims to give residents hope of decent housing. The Swakopmund Mass Housing Project plans to build 385 houses by the end of the year. Construction began in June last year, and it's more than halfway done.
We plan to start to give the mass housing houses over around February 2015. In Swakopmund, we go about a program that we register all the people living in And it's not only people from DRC must get these houses, but also people living in Swakopmund without houses. 40% will be covered by the government and the rest will be paid by people. We are very positive that people living in DRC will move in that houses according to what they can afford.
Houses come fully equipped with running water and electricity. It is hoped that the area and lives of people there will be transformed.
Emotionally, I'm very attached to DRC, the community of DRC, and I'm not only thinking of me having a house. It's my dream to have a house in DRC, but for everybody living in DRC, I dream for women to have little gardens, each one having a little garden in front of a shack, and that culture must continue once they move to the new houses.
The nationwide project is estimated to cost $4 billion. Government is investing $12.5 million in the Swakopmund project. A total of 185,000 houses will be built across the country by the year 2030. Carol Oyola, CCTV.
South Africa's benchmark top 40 index posted its biggest drop since November 2008 on Monday, shedding 3.9% as investors worldwide dumped emerging market assets in the face of a resurgent dollar and falling oil prices. Now, the rand weakened to a 2.5-week low against the dollar on similar concerns. The local unit slipped 0.25% to 11.74 to the dollar, its weakest level since mid-December last year. The Eurozone area is battling weak economic activity and consumer spending that has remained outside the European Central Bank's 2% target. Manufacturing activity in countries like China and India is at its lowest level in years. The rand is in danger of slipping back towards 6-year lows of 11.84 under the current economic climate, which has favored dollar buying as inadequate electricity and budget deficits spook investors. All right, so Sumitra Naidu now joins us live from Johannesburg for a deeper look into expected consequences of the European Union's quantitative easing program. Sumitra, thanks for joining us. So a somewhat mirror image of events in the South African economy at this time last year, emerging market sell-off and a weak rand. Were any lessons learned, and how much risk is there should the EU proceed with its quantitative easing program?
That's right, Panina. Not a great start to the year. And I think it's a reminder of how vulnerable the South African economy, like all other emerging markets, are to global events. And with pending action expected from the United States and the EU, there's a few more headwinds to come, most notably in the currency. We saw the rand falling again today to near 6-year lows on the back of concerns that the US is expected to start hiking rates this year. And of course, on the back of events in Europe, with Greece possibly making an exit from the Eurozone. With the EU looking at quantitative easing, this could actually be some good news. Europe is one of South Africa's largest trading partners. More liquidity in Europe could increase trade, as we saw previously with the US QE program. There was also increased investment flows into South Africa. However, with that increased flow of money is the risk of currency appreciation. And we saw that also a few years ago. And it even started a bit of a price war amongst emerging markets. Not good news for exports as well. There's also the risk of an increase in inflation. So yes, there's quite a few risks if the EU goes ahead.
Right, so let's rope in Melanie Ralph. She's joining us now live from London. Melanie, the global market dynamics are stacking up against emerging market investment. How do analysts see the markets playing out over the coming months?
Well, there are two potentially major events on the horizon that could affect the global economic balance. The first being the prospect of QE from the European Central Bank, and the other being a rate hike in the US, both of which aren't great for emerging markets. As soon as investors start seeing higher returns on their investments in developed markets, sentiment to sniff out higher yields in more risky investments for portfolios dwindles. It remains to be seen when exactly either monetary move will happen this year. For Europe, at least, the prospect of QE is inching closer as more troubles hit the headlines. There's certainly the snap elections in Greece and the fact that the Eurozone is flirting with deflation could lead the ECB to launch QE sooner rather than later. Some even eyeing the Jan 22nd monetary policy meeting for a possible announcement on that.
Right, so Sumitra, the European Union is a key export market for South Africa, like you mentioned. Do events in Europe spell more trouble for the South African economy?
Well, South Africa has already felt the effects of Europe's recession as spending dropped significantly since 2008. Europe is in a really tough position and needs to act quickly. Inflation is already very low. If Europe goes into deflation, this will mean more bad news, not only for South Africa, but for the global economy as a whole. It's hoped that the liquidity injection will help boost that economy. And of course, that will spill over into South Africa. So, you know, obviously, it's a wait and see approach. We have to see what happens. But I think if Europe doesn't act at this point, it does spell bad news for us.
Right. So, Melanie, compared to investing in economies within Africa, how risky is Europe when it comes to investment? I mean, does Africa offer a formidable investment alternative going by the fallout in Europe occasioned by Greece?
Well, this is the big question, and we'll have a clear answer on that front over the coming weeks after those Greek elections. Greece is certainly making European investors jittery. However, it's not presenting the same threat as it once did to Europe. The Eurozone has come a long way since the last time we were asking the same question. The ESM fund and the banking union has made the threat of contagion less of an issue, although it's still a threat. But certainly some analysts say this political instability we're seeing in Greece is bad for Greece itself, but not a disaster for the overall Eurozone as it once was. And if we see QE that will increase capital flows to the region, possibly to the detriment of other investment areas.
So then, Melanie, are we looking at a possible breakup of the European Union?
Well, in short, no, or at least extremely unlikely, according to some analysts. We are seeing more and more anti-EU rhetoric from Greece, of course, but also seeing a backlash against Europe on our own shores here in the UK. Prime Minister David Cameron has committed to holding a referendum on the UK's EU membership by the end of 2017 if the ruling Conservatives win power in May's general election. There's been a big rise in popularity for Eurosceptic parties like UKIP in the last few years, and it looks as though David Cameron is taking notice. Now, opinions are split here on whether leaving the EU is a good thing. One free market group says the UK's economy could grow as there would be less red tape to battle, but there's a risk that the UK could end up losing its influence over big decisions while still having to comply with EU regulations.
And finally, Sumitra, what are the prospects for the South African economy this year?
Well, many are optimistic that further implementation of the National Development Plan will happen more speedily in 2015. The plan, of course, is key to lifting economic growth and addressing the challenges this economy faces. However, there's been many setbacks that will have to be addressed urgently. Power supply, of course, at the top of that list. The new Medupi power station is expected to come online in the near future. That will help ease the strain on the grid. The load shedding, of course, caused mayhem towards the end of last year, and that may be reflected in the fourth quarter GDP numbers. But economists are optimistic that GDP for 2014 will come in at around 1.4%. Growth this year is forecast to come in a bit higher, between 1.8 and 2%. So we'll have to wait and see.
Indeed, we shall, Sumitra. Interesting conversation there. Thank you to the both of you for joining us. Sumitra and I do live for us in Johannesburg, Melanie Ralph live from London. Now, oil prices dropped to fresh 5.5-year lows Monday on concerns about growing surplus of the commodity and weaker demand. Brent crude dropped to as low as $54.60 a barrel, its weakest since May 2009. A combination of energy data shows Russia's oil output hit a post-Soviet high in 2014, averaging 10.58 million barrels per day, up 0.7% thanks to small non-state producers. Iraq's oil exports were at their highest since 1980 in December last year, with the record sales from the country's southern terminals. This as oil producer cartel OPEC maintains it will not cut output amid the supply glut. It will instead let the market find its own ground. The two crude oil benchmarks, Brent and US light crude, also known as West Texas Intermediate, have now lost more than half of their value since mid last year. Now, Egypt's stock market headed north on the second day of trading this year, rebounding from Sunday's lows. The main index, EGX 30, edged up by more than 0.70% to reach above 9,000 points Monday, as more traders tightened their confidence grip on the booze. The North African country was 2014's best destination for stock market investors, producing total returns of more than 30%. And this was despite political uncertainty following the 2011 unrest.
Today's session began at a slight drop, but this doesn't reflect the economic situation of Egypt. Rather, this reflects on the behavior of investors, in that Egyptian investors are selling in order to clear some monetary positions. As for the foreign investors, they usually sell at the beginning of a session and buy at the end of a session. The index is expected to reach and surpass 10,000 points in the next phase due to the good actions of the government and the wise leadership of the president.
So let's run you through the markets now. And as earlier mentioned in our conversation with Sumitra Naidu, South Africa's benchmark top 40 index posted its biggest drop since November 2008 on Monday, shedding 3.9% as investors worldwide dumped emerging market assets in the face of a resurgent dollar and falling oil prices. The JSE Africa All Share Index also dropped 2.5%, while the AGX ended the day in the green by about 0.75%. Still ahead here on Global Biz, olive farms in Tunisia report a bumper harvest. And how farmers in Rwanda are staying profitable despite the vagaries of climate change.
Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening.
Global Business, weekdays at this time on CCTV Africa.
Effects of the austerity measures are evident and were expected. Egyptians, however, seem to be patient about it. But El-Sisi told government he wants to control the prices promptly before people's patience runs out.
You're watching Global Business. Welcome back. Now, olive farms in central and southern Tunisia are having a bumper harvest. Heavy rains at key points during the year means the country is predicted to produce around 4 times the amount of olive oil it managed last year.
These Tunisian workers at the Salem olive oil factory sort out heaps of the crop. The Ministry of Agriculture expects olive oil production to reach 280,000 tons for the 2014-2015 season. That's more than 4 times previous levels. Average annual production for the last 10 years has been around 185,000 tons, thanks to good weather for the trees.
The
2013-2014 season had good rainfall, especially in regions of Sidi Bouzid, Sfax and Kairouan, with quantities of rain considerably superior to normal during autumn 2013 and spring of 2014.
Rainfall was 2 to 4 times higher than average during autumn and spring, and that's led to high production and improved quality in olive farming.
Almost all of the olive trees in Tunisia, around 95%, are cultivated without irrigation. So it depends a lot on the climate and the rainfall. Since the Mediterranean climate is capricious, it can vary from one year to another, with a very significant difference in terms of rainfall.
But not all Tunisian olive farms have had a successful year. Northern regions are expected to reach only average production levels, even lower than last year's harvest. Farmers point the finger at global warming.
These days there are important rainfalls, and a stressed fruit lacking water will absorb a lot of water, and so the oil yield decreases because the olive becomes heavier. The quantity of oil is the same, but the cost for the farmer and the client is higher.
And cold temperatures at the moment mean farmers are under pressure to finish the harvest more quickly.
The harvest is important, so with normal conditions, without the cold or the rain, the question is whether we'll manage to harvest everything or not. So now this cold will blacken the olives and speed up the ripening, and so we have to hurry.
Tunisia's oil exports are expected to generate around $640 million this year. The country plans to develop irrigation systems which would help stabilize production going forward. Robert Soy, CCTV.
With the weather in Rwanda becoming increasingly unpredictable, farmers are at risk of losing much of their harvest. A new scheme to help farmers adapt to the changing climate has been set up, allowing them to get bumper harvests and store their crops safely, ready for the market.
Another busy farming day in eastern Rwanda. Most of these farmers have to adapt to changes in the global climate that has affected most of their produce.
Due to climate change, our yields are lower, and even when it rains, the maize doesn't grow well.
In agricultural parts of the country, planting cycles have always been determined by seasons, but rain no longer falls when it should, and traditional farming practices are failing. Farmers now lose up to 40% of harvests due to erratic weather, and if climate change issues are not addressed quickly, it could cost the country's agriculture sector up to $300 million a year by 2030. The International Fund for Agricultural Development and the Rwandan government have teamed up to help minimize losses through the Climate Resilient and Post-Harvest Agribusiness Support Project, a climate change adaptation program for smallholder farmers. To help build capacity, farmers are being educated on new production methods and provided with seeds, while cooperatives are now being equipped with modern storage facilities where grains can be dried and stored safely. Business training is also provided to farmers to help them become market players capable of delivering large quantities of high-quality produce to both public and private companies.
When it rains and we have fodder, we get about 13 liters of milk a day, but we get much less when we have long dry spells.
Through maize growing and having access to markets, I started to get more income, and I could afford to get the iron sheets to build this house that I'm living in now.
This 5-year program aims to provide facilities and know-how to some 155,000 farmers. Already 10 districts located in Rwanda's northwest, southern and eastern regions are benefiting from the program. Maria Galang, CCTV.
So let's take a look at commodities. And crude prices continue their downward trend. But despite the falling prices, Italian oil and gas major Eni said Monday it had started production at the Nini Marine field in the Republic of Congo just 16 months after making the discovery. In a statement, Eni said production in the first phase of the offshore project was 7,500 barrels of oil equivalent per day. Still ahead here on Global Biz, a new approach to coffee, the Nigerian chain that is raring to outperform global giant Starbucks.
Lived in 4 different African countries and with a diverse background, I cherish the personal as well as professional experiences I've had across the continent. It's this understanding of the place I call home that drives me to tell stories about its people, its needs, present and future. There's just so much happening in Africa in terms of the way forward and development. It only brings positivity. My place at CCTV Africa is about creating awareness around the realities of a continent that is indeed complex, vibrant, and has great potential. Africa is my home. How it prospers, the challenges it faces, its people all matter to me because this is my future. I'm Famida Miller, and I'm a reporter and anchor at CCTV Africa. It may not be known for coffee production, but Africa's biggest economy is trying to carve a niche in the coffee industry. One small entrepreneur is determined to start a coffee shop that may one day rival America's Starbucks. And so far, the reception from Nigerians is quite mouth-watering.
Rwanda's finest Arabica beans usually don't stay on African soil for long. The vast majority are exported to coffee shops in Europe and the United States. But Nigerian Ngozi Dozie, with his budding Cafe Neo brand, is hoping to keep a little more of the coffee on the continent.
So Neo in Swana, from Botswana, means gift. And of course, Neo also means new in Latin. So for us, it's a new way of, a new approach to coffee. A new approach where we as Africans drink the coffee that we produce that's been a gift for us, as opposed to exporting it and importing, sub-grade coffee.
With 3 outlets in Lagos and 1 in the Rwandan capital Kigali, Neo has Africa-wide ambitions. Part of the challenge is to make coffee drinking a daily activity, something that is still alien to most here in Nigeria. Almost all of Neo's trade comes from those who've imported their caffeine habit from abroad.
99% of our customers are returnees, journey returnees, and of course foreigners. Yeah, you find they're the ones, they got a chance of, visiting other Western countries or Europe.
Chukwukwa is one of these returnees with a yearning for a daily dose of coffee.
I am a Starbucks person. Anytime I go to the States or outside the country, I look for Starbucks, and the first thing I do, I grab a coffee. And now that I have Cafe Neo, I come to Cafe Neo for my cafe latte.
While not yet a global player, Neo hopes that if Africans develop a taste for homegrown beans, it will create a stir to rival Starbucks. Clementine Logan, CCTV.
A brewery in Bruges, United Kingdom, plans to install an underground pipeline linking it to a bottling plant. This is in an effort to reduce the number of lorries carrying beer in the city's streets. The pipe linking the De Haveman brewery to the plant is said to be 3 kilometers long and will carry up to 6,000 liters of beer per hour. Usually around 500 lorries are used. The brewery's owner, Javier Venest, said the decision to continue to brew the beer on its current site, Bruges City Centre, was taken in order to maintain the brand's character. Even though a processing plant was opened on an industrial estate in 2010, the pipeline will be made of polyethylene and its construction is set to start next year. All right, so just before we wrap up, a quick check at the currencies now. The Kenyan shilling was steady Monday, and traders say they were watching for any action the central bank takes during the session to see what direction the shilling would take. On Friday, the central bank mopped up 8.65 billion shillings, so just about $95 million in excess liquidity from the money market. Now, mopping up excess liquidity makes it relatively more expensive to hold long dollar positions, which partly supports the shilling. And tomorrow on Global Business, the Uganda Revenue Authority closes the year with the biggest revenue deficit in over a decade. We will, of course, have the details. Plus, we'll also be meeting a young Egyptian woman who has defied the odds to take up a job in a male-dominated industry, motor vehicle mechanics. And that's it for this edition of Global Business. Remember, you can send your feedback to globalbusinessafrica@cctv.com. You can visit our Facebook page, CCTV Africa, and you can also stay in touch with Global Business on Twitter using the handle @CCTV News Africa. I am Penina Karibe. Thanks for watching.